This is Alan Farley from FX Empire. Apple's trading around the 116 level on Tuesday morning after the sell-off that happened just 2 days after the stock split 4-for-1. Now this looks like a very toppy pattern, so we want to go back all the way to December 2018, and you'll see we have the outline for potential of 5-wave Elliott advance. Ended the first wave up here in about May of 2019, and then a pullback, then a burst to new highs in February 2020, followed by a wave 4 pandemic decline. And then we have this fifth wave, sort of this climax wave with this cute little continuation gap right in the middle, which is very classic. This is also the most vertical wave for the three, which is very typical. It's also looks like the longest wave, with this being the second longest wave and this being the shortest wave, and that's pretty typical. Now, the only problem with this Elliott 5-wave pattern is the top of the first wave here is intersecting with the bottom of the fourth wave. Now, this was always considered to be a no-no by Elliott, but it routinely shows up when you're dealing with downtrends with Elliott 5-wave declines. And so in this algorithmic-driven world, it's certainly something that could happen, but it doesn't make this a perfect pattern. Anyway, we're going to find out here. So we're in a corrective mode that's come back all the way to the 50-day moving average. And Apple can trade through this and trade all the way down to about the 200-day moving average and set off still a fairly good buying opportunity right down here at the breakout support in the 80s. Will it get that far? We really don't know. This is just projection, but there's a good argument to be made that Apple's longer-term top has now been printed.